we are live, and we are live. Wonderful and beautiful, glorious day it is. Ladies and gentlemen, this is the day the Lord has made. Let us all rejoice and be glad in it. It is a super Saturday. Absolutely, it is. It is a super Saturday. It is October 26, 2024. I am YT on YT. That means yours truly on YouTube. Absolutely. And this is a weekly trade watch list for October 26th through November 2nd, the next upcoming week, beginning with tomorrow. Because if you didn't know, the first day of the week is not Monday, it is Sunday. All right. It is Sunday. So this is the weekly trade watch list. All right, you know how we do it. We go over the prior trades we took the previous week, right? This week, and then we go into looking at setups that we're looking for the week ahead. All right. So right here, y'all know we starting off on gold, right? Trading gold, and what a trading day Friday to end the week on a 1 to 10. A 1 to 10 trade, obviously 1 to 10 plus, because look, this is my entry, this is my stop loss price, this is my take profit one, this is my take profit two, 10%. And look at the market. It went all the way up here and it continued to go what? Bullish from there. And I had anticipations that it would go beyond this high right here and probably stretch to this M15 supply zone. But I'm not being greedy. And all I do is go for a 1 to 10 every single trade. Now, I know that's irrational, right? That every trade is going to hit 10%. That's irrational. But what I'm saying is, I have a take partial system. My take profit is always 10% for my entry. All right, based off of my entry, my risk, my TP, my overall TP is always 10%. All right. And so risking uh to some people this may be 14 pips, to others it may be 140 pips, but then going for what? 141 pips or 1418 pips. And so when the market broke this high right here, was TP1, we closed 50% of our volume. Stop loss went to risk free, break even, and we let the overall rest of the trade do its thing. Now here's the deal. Many people, many people. Absolutely, bro. My brother RTC, Ron the Creator, is in the building. We killed this week. We killed this week. Though we did have some lessons in the market, but they were so small. But overall, we killed the week. The week was murdered. There's an APB out for my arrest. I'm just saying. I have a warrant for my arrest for murdering the market this week on gold. I'm just saying. It is what it is. But so we're going to simply go over this 1 to 10 trade. This was the trade that ended the week. Okay, this was the trade that ended the week. This was on Friday. Some people, I don't trade on Fridays. What the case may be. Hey, I trade because the market open. That's it. It's trader preferenced. It is absolutely trader preferenced. By the way, clear American carbonated water. This flavor is white grape that I was just consuming. White grape, clear American, 79 cents at your super Walmart, Wally World. All right, got other flavors downstairs. All right, but here's the deal: we're gonna simply go over this trade, and then we're gonna look at what gold could be possibly doing, and then we're gonna look at Bitcoin, and we're gonna look after Bitcoin. We're gonna be looking at any other pairs that people in the comment section want to look at. All right. Any other pairs you want to see marked up, even if you don't trade that pair, but you just want to see how to mark it up, or how not how I mark it up, or how you are supposed to mark it up. Like, what's a break of structure? What is a change of character? What is liquidity? What are these market price cycles that you are talking about? Okay. All right. So here's the deal. This is gold, right? This is the trade that we took, right? So um one of my bros is on the call with me. that's on the live, in the comment section, Ron the creator Oliver, he took the trade with me. I don't know anybody else that took the trade, but we were on live together on a live recorded session and took this trade on a Zoom call. And so I have a color code system with my charts. So if you see black is on my monthly, pink is on my weekly time frame up here. On my daily is going to be red. On the H4 is going to be blue. On the H1 is going to be green. M30 is going to be gray. M15 is going to be purple, as you see this right here. M5 is going to be orange, as you see this right here. And M1 is going to be yellow. Now, what are these up here? Monthly, these candlesticks print on a monthly basis, 30 to 31 days. Weekly, these candlesticks print on a weekly basis. Okay. Daily, these candlesticks print on a 24-hour basis. Okay, no, not 24 hours. I'm sorry. In a trading day, is 12 hours. So 4 p.m. Central Standard Time to 4 p.m. Central, 5 p.m. Eastern to 5 p.m. Eastern. Okay, and 2 p.m. Pacific to 2 p.m. Pacific Standard Time. A trading day is a culmination of 12 hours. Okay, the times that I just gave out. So the daily, it takes a full day to complete those candlesticks. Not 24 hours, but a full day in trading day, but not a full day in 24 hours. All right. So then you got the H4. It takes these candles 4 hours to print, complete and print. 1 hour candlesticks, 30-minute candlesticks, 15-minute candlesticks, 5-minute candlesticks, and 1 minute candlesticks. So here's the deal. The market is a trend within inside of a trend, 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 within inside of a trend. Okay. So just because overall the monthly is bullish, right, which means it's going upward, that doesn't mean we cannot go on a lower time frame and take it for sales. Every single time frame acts as its own market. Even though the pair is gold, right? Every single time frame acts as its own market because you have trends within inside of trends, within inside of trends, within inside of trends, within inside of trends, right? So you, even though the overall monthly is bullish, you could be taking it for sales on a lower time frame. Okay, there's nothing that says you can't do that. Okay, that's just trader preferenced. Okay, so now here's the deal. Let's tap into this trade right here. What was the thought process? What was the trading psychology that went into this trade? Okay, now I'm not going to even cap. We didn't take any lessons while waiting on this trade. We were just waiting for it to develop. Okay, it wasn't ready. Okay, it simply wasn't ready. One execution and then boom. Now here's the deal. I literally was talking to my bro Ron as we was looking at this trade live, right? Um I said, yeah, this is a change of character right here. But a change of character, if you do not have this written down, write it in your notes. A change of character does not determine a change of trend. A change of character does not determine a change of trend, but a break of structure shows continuation of a trend. Okay. So you see that the market created a bullish, which means upward, break of structure. I mean, change of character right here. Why? Because this right here, let me go on the M5 time frame, right? Because that's where I placed it. You have this slanting lower on the candlesticks. And when I double click, it's this purple line is going to pop up at the bottom called the relative strength index. It's a default indicator. As soon as when you first log in your TradingView account, it's going to be a purple little squiggly line. It's called the relative strength index. It's showing you a representation of when the market is overbought and when it is oversold. All right, that makes sense. Y'all follow me so far? My people on the live. Y'all with it? With it so far? Able to spot a divergence? Cool. What's up, Janice? These are people that's actually in the free Telegram chat that's on the live. All right. And you can hear from them. It's free. It's free. It's in the description below. Download Telegram from your uh, Apple device or Android device. Simply come back to the live video, click Trading Community Telegram, click the Trading Signals Telegram, and I'll give you a shout out in Telegram. We are 11 members away from hitting 100 in the family. 11 members away. All right. 11 people to impact. All right. So continuing with gold. This is slanting lower. And you can see on the RSI high slanting upward, right? This is a divergence. This is a representation of an accumulation. So what causes the market to create a bullish change of character? Internally right here, the market had to do what? Accumulate, reaccumulate, and then create a what? A bullish change of character. Now that the market has accumulated and reaccumulated and created a bullish change of character, who has to come into the market? The bulls or the bears? The question is this. Now that the market has accumulated and reaccumulated and caused a bullish change of character, now who has to come into the market? The bears. Absolutely, Aki. The bears have to come into the market now. When you understand that, you remain patient. You remain disciplined. You can see right here, if you know how a market prints, thank God for Richard DeMille Wyckoff. If you know how a market prints, it prints in this order. It prints in market price cycles. Accumulation, the market would expand and go bullish. It'll reaccumulate, it'll expand again. Then it reaches a premium, it'll do what? Distribute, go down, and then it'll redistribute and go down again. And then it's going to print those same 4 market price cycles all over again. It's going to print them all over again, whether it's a uptrend or a downtrend, doesn't matter. All right. So we remain disciplined, right? Let's go to the M1. We can see how what? I tell you all the time, engulfing candlesticks represent what? Engulfing candlesticks represent what? My people that be in the chat, what do engulfing candlesticks represent? What do I always say? Engulfing candlesticks represent what? Let me see who been paying attention. Engulfing candlesticks represent what? What do they represent? And if you don't know, you don't know. But you'll never forget once I tell you. Because it won't be the first time I said it, and it won't be the last. It'll keep you disciplined. Engulfing candlesticks. Nope, not changing momentum. Absolutely. Ron got it. Engulfing candlesticks represent the completion of a market price cycle. Think about it. Think about it. When I show this diagram right here, let me show this diagram. Let me pull up this diagram. Let's see. Let me see if I can pull it up. Let me pull up this diagram. Here we go. Boom. Here we go. Type 1, type 2 accumulation, type 1, type 2 distribution, right? Now, here's the deal. Come on, bro. Okay, here we go. Here's the deal. After all of these events and phases that are printed in this type 1 and type 2 accumulation, is going to do what? It's going from a downtrend, going sideways, playing chess, and then it's going to do what? Expand and go bullish. You got to think that, okay, when it's done going sideways and it expands and goes up, is going to create an imbalance. Is going to create an imbalance. Same thing with a distribution. Is going up, is turning sideways, and then is going down, is going to create an imbalance. If you haven't paid attention, if you look at a divergence, a bullish divergence or a bearish divergence, and the market changing character on a lower time frame, go to a higher time frame, and I guarantee you it'll be an engulfing candlestick. It'll be an engulfing candlestick. So that's how you know that, oh, okay, cool. Though I see the divergence and change of character on a smaller time frame, on a higher time frame, it's going to one candlestick is going to represent the entire distribution or the entire accumulation. Does that make sense? Does that make sense? All right. So an engulfing candlestick, regardless of what time frame it's on, engulfing candlestick represents the what? Completion of a market price cycle. So this right here, this engulfing candlestick is an accumulation. You see how the market did what? Had this bearish candlestick and then did what? Had another engulfing candlestick, which is a what? What's this market price cycle right here? What is this market price cycle right here representing? My people in the comments. What is that? What is that next? Not the first one. What is the second bullish engulfing candlestick? What's that? What's the name of that market price cycle? What's the name of that second bullish engulfing candlestick? What's the name of that market price cycle? Reaccumulation. Absolutely. Absolutely. 100% you're correct. A reaccumulation. So right here, you got your accumulation. You got your what? Reaccumulation. That does what? Causes a bullish change of character. Now, who has to come into the market? The bears. So here's the deal. You could have absolutely 100% sold this, but it just wasn't long term. So every time you come to the market, you could be like this. Oh, I just feel like taking buys today. Then only take buys. You can come to the market and say, oh, I just only feel like taking sales today. Well, go ahead and take sales. But the thing about it is you don't be married to a biased. That's why you miss out on a lot of trades. Oh, I'm looking at something. Oh, I'm looking for a buy. I'm looking for a sell. Okay, based off of what? The only way you look for a buy or you look for a sell, and say you have an hour and a half or 2 hours of free time to dedicate to the chart, right? Without any interruption, you're just sitting here watching the candlesticks print. Your bias should switch often depending on the time frame you're looking at, especially if you're looking at it between M15, M5, and M1. Your bias to switch often. Okay, because the smaller the time frame, the often your bias is going to switch. So your bias is switching while the candlesticks are printing the setup. So you're not married to one bias. Hey, market does this, I'm looking for a buy. Market does this, I'm looking for a sell. Okay, so right here in this particular moment, right, I understand. Okay, this is accumulation, reaccumulation. So now from here, I'm looking at what? Okay, I got my reaccumulation. I got a what? Retracement. I got another engulfing candlestick. All right, another impulsive move. Retrace. What happened right here? You can see the what? Engulfing candlestick right here, which means what? Accumulation. You can see the what? The reaccumulation in between here that popped up with another imbalance, right? So then the market came back down here and did what? See, all of this, I can read this to you. Oh my goodness, all day long. So the market tapped into this reaccumulation. Isn't a reaccumulation area or zone an area of interest where the buyers can come back and participate in the market? Isn't that true? Isn't that true? Isn't the reaccumulation area an opportunity for the buyers to come back into the market and participate and make the market go back bullish? Absolutely, 100%. So here's the deal. When the market tapped into this reaccumulation right here, right, with this wick, it didn't have enough juice to do what? Accumulate, reaccumulate, to break this old high and create a new one. It didn't have enough juice. So what happened? This was a higher low that was supposed to do what? Accumulate, reaccumulate, break this old high and create a new one. But it didn't. Turned out to be a retracement, tapped into what? This supply zone right here with this wick. And then now you got a what? a bearish engulfing candlestick, which is showing what? A completion of a market price cycle. Does that make sense? So yeah, you could have sold right here, but it wasn't long. It wasn't long term. It wasn't long term. Okay. So then right here is an area of interest where the buyers can come back and participate in the market. That's an accumulation level. So what happened? The market came back here and did what? Accumulated, reaccumulated, broke this structure right here, and created a new high. Does that make sense? So then the market did what? Distributed, engulfing candlestick, distributed, redistributed, came back and tapped into the zone right here. Now, after it tapped back in and retraced this impulsive move that broke this structure and created this new high, it's supposed to do what? Create a higher low. And that higher low the purpose of a higher low is to do what? Break the old high and create a new one. The purpose of a higher low is to break the old high and create a new one. Okay. So what happened? The market created a higher low, but this higher low right here, it did not do its job. It did not accumulate and reaccumulate to break this old high and create a new one. What did the market do? Come back, create a lower high, right? Now, what's the purpose of a lower high? What is the primary purpose and objective of a lower high? What is it supposed to do? I already told you what a higher low is supposed to do, but what is a lower high supposed to do? What is a lower high supposed to do? What is a lower high's primary objective in the market? What is it supposed to do? What is a lower high's primary objective in the market? What is it supposed to do? And it's going to be at times that it doesn't do it. Absolutely. Absolutely, Ron. It's supposed to break the old low and create a new low. Let's see. Lower high should not break the previous high. It's to indicate a downtrend. Absolutely. So guess what? This lower high right here, it's supposed to do what? Break this old low and create a new low. That's the answer I'm looking for. So if this wants to be a lower high, then it's got to do its job. To do what? Distribute, redistribute, break this old low, create a new low. Now guess what? We have a high, we have a low, we have a lower high. Engulfing candlestick shows what? Completion of a market price cycle, distribution, redistribution, breaks the structure, causes a what? Now, since this is the last impulsive, bullish impulsive move, the last accumulation area that did what? Broke this old high and created a new one. The market has retraced into it and disrespected this level. Now you have a bearish change of character. That's why it says CHOCH. You have a bearish change of character. Now, guess what? For your notes, just like I said, just because the market changed character does not mean it changed trend, right? And here's the evidence, right? Here's the divergence, right? Slanting equal highs, roughly slanting upward. Here's the change of character. Here's the evidence. Here's the evidence. Orlando, how did you know that this market was this bearish? How did you know that this bearish leg right here was a retracement and it wasn't a change of trend? You got to be able to read the footprints in the sand. Okay? Got to be able to read the footprints in the sand. How did I know it? After the market caused a change of character, right? After the market caused a change of character, right? Nothing, You have no supply zones being mitigated. That was the clue. Look at this. Once the market changed character on this move, you have what? Unmitigated supply zone right here that hasn't been touched. Unmitigated supply zone right here that hasn't been touched. And the market went into what? It retraced. What do you have right here? Up. This one's been mitigated by that wick. That it didn't create a fair value gap. So these wicks, the wick of this third candlestick and the wick of this bottom wick of this first candlestick, they're mitigated. They're touching. I can zoom in and show you. So right here, but it's still an imbalance. It's still an impulsive move imbalance. Okay, because this didn't retrace to fill this. That's unmitigated. Okay, so you got all these 1, 2, 3 supply zones being unmitigated, going into a demand zone. So guess what? Check this out. Check this out too. Check this out. If this is going to be a what? A high in the market, right? This high did what? Mitigated this supply zone right here. Right? Look at it. So this is a supply zone, right? So guess what? It's saying, oh, hey, this probably wants to be a lower high in the market. This probably wants to be a lower high because guess what? The market went bearish, right? The market going bearish. This is a supply zone, right? So guess what? This bullish change of character became the liquidity in order to fuel this sell move. So yeah, this was a nice, dope sell. This liquidity right here was taken too. Okay. So yeah, this is a nice, dope sell from here. It's nothing saying that you can't sell from here. It just wasn't long term. So guess what? If this was going to be a lower high, it needs to do its job and break the old low and create a new low. Where's the old low? The old low is right here at this what? Accumulation candlestick right here. This is the old low. Okay? That makes sense? Does that make sense? That accumulation level, that first bullish engulfing candlestick is the most recent low in the market. All right? Now, if this thing wants to go bearish, it has to break this low and create a new low to confirm to us that, hey, if you want to go bearish, you got to prove it to me that you want to go bearish. You got to go break this old low and create a new low. So guess what happened? The market came back down to this level and it attempted to break that low. But the bulls said, stop. In the name of love. No, I'm just playing. But the bulls said, stop. You're not going to break this low right here. The bulls said, hey, we're at a cheap enough price where we want to come back into the market. It's on discount. It's on retail. It's a retail price. So guess what? I can see right here where the bulls did what? Diverge. Right here. The bulls diverged right here. And guess what? This is a change of character because this impulsive move right here broke this low, created this new low. The market went bullish. Bam, change character right here. Change character right here, right? Remember, a change of character does not determine a change of trend, but a break of structure shows continuation of a trend. So guess what? When did I actually pull the plug to get in for this buy trade? Okay. So here's the deal. This is the first impulsive move. Guess what? You never take the first impulsive move because this could have been a retracement into a supply zone and this could have led to a lower high because you see this bearish engulfing candlestick came back out, right? Bearish engulfing candlestick came out. So I'm sitting here chilling. I said, okay, cool. If this market wants to go bearish, what it'll do is this. Okay, this is a distribution candle. And if the market wants to go bearish, what would it do? It'll redistribute, break this low, and create a new low. But guess what? When this candlestick right here came out and completed up here, ball game, buy market execution. Why? Because the market was not going to redistribute after. If this candlestick came back inside like this, no way the market was going to be able to redistribute. The market was supposed to what? Do what? Distribute, redistribute, and boom, go right here. So I knew the market, this was what? An accumulation. And when this candlestick came up here and completed up here, I knew it was going to be a reaccumulation. So guess what? At the close of this candlestick up here, buy market execution, stop loss. My original stop loss was literally below this wick right here. But I said, you want to know what? We're gonna go below the actual where the bullish move started. So that's why my stop loss is literally right below this red candlestick, the wickedest red candlestick. All right, Ron is a testimony that the original stop loss was right here. Was it not, Ron? Was it not? Wasn't that original stop loss right below that bullish move, that second push? It was a little bit shorter than the one that's on the screen, right? The stop loss that you see on the screen was a little bit smaller. It wasn't 14 pips. It was smaller than 14 pips. And the thing about it is this: the stop loss that was smaller than the one that's on the screen still didn't get hit. That's how surgical I trade. Y'all think I trade based off of a specific pip amount? No, I'm trading based off of the most recent high or the most recent low that was created in the market. And hopefully that it's within my pip parameters as far as what I want to risk. So the stop loss that's on the screen was way smaller. The stop loss that you see on the screen, it was way smaller than the one that you see on the screen. Okay. Way smaller. Okay. Like literally, it was right. Let me see. It was right here up underneath this candlestick. Right here somewhere. Maybe like 2017 70 or something like that. It was smaller than that. But I said, you want to know what? Let me go ahead and put it right below the actual first impulsive move down here. So that's why the stop loss is down here. Okay. And so then what happened? I knew it was a retracement based off of no supply zones being mitigated after the change of character, heading into a demand zone. The bulls had a what? Divergence right here. You can see it on the RSI. Right here. Look at it. This is slanting lower. This right here is what? On the RSI. This is slanting upward. Let me remove this. You can see how this is slanting lower and this is slanting upward right here. This small on the M1 time frame. That means that midpoint right here. Oh, that's the last supply zone. Change of character. Okay, here's a distribution candle. I was anticipating a redistribution, but the market closed up here. Boom. Redistribution is disqualified. Is not coming in. The bull's about to turn this into a reaccumulation. And that's what happened. And guess what? TP1. TP1 was where? Right above this what? This last known supply zone that was in the market. Because guess what? The market tapped this and then the sellers came in. It was a reaction, right? But this thing going bullish. So boom, right above that high. TP1, 50% partials were closed. I was trading with a 5.00 lot size. Okay. Stop loss went to break even. And what I do is my overall TP is always 10% from my entry and 10% from my entry. Okay. So that's why you see a 1 to 10 right here. And that's why my TP was up here. So look, I know many people would have done this. When they seen this retracement right here, oh man, I'm about to get out the market. I'm about to get out. You got to really think about it. You've already paid yourself half. Okay. So if the market decides to do a U-turn and take your remaining volume out that's at break even, you got to think of it this way psychologically. I just paid myself from a losing trade. That's literally what just happened. I just paid myself half from an opportunity that I was going to overall lose in the first place. That's the real spiel behind that. That's why I trade the way I do. And I trade, I took that particular setup like that. I do that every single time. I always go for a 1 to 10. I have a TP1, closing 50% partial, stop loss goes to risk free, and I let the rest ride to the overall 10%. But if it decides to do a U-turn, okay, that wasn't a 10R trade. Okay. But I was able to pay myself at least half, protect the remaining volume and the runner that I have in the market. I was at least able to pay myself at least half, a partial, before the market did a U-turn and took out my remaining volume. Now, if you must have a take partial system because your account can still grow in an overall losing effort. The trade was meant to go against me, or whatever the case may be, but you was at least you was able to take a partial, and your remaining volume goes to, and you protect the remaining volume in the market and put that at break even. Because you're working against yourself. Because now just imagine this. Somebody got out right here, or when they start seeing this retrace, okay, they got out. They came back later on to the market. Oh man, if I would have had that 10% TP like Orlando had, man, my account would have been up. You're working against yourself. Me personally, I never take myself out the market. Once I'm in, I'm in. So here's the deal. Because you want to document if the setup was successful or if it failed. So, and this is no knock to people who, okay, have a dollar amount goal or have a percentage goal. Okay, this is no knock to them. Okay, I'm not throwing slugs or throwing shots. What I'm saying is this: if you're sitting here like this, screen watching, okay, you got in on a particular candle. Okay, it went up a few dollars, or your account went up a few dollars, and you sit there and you manually close it. I look at that as working against yourself. How do you know if your setup, the setups that you trade, or the setup that you trade, how do you know if it was going to work out if you don't let it play out? How do you know if it's going to work out, or because now what you're going to do is this: you're going to start building. You're going to start catching these wins in a row, right? From doing that, you're going to start catching these wins in a row. I've been in the market for 5 minutes. Boom, I'm going to close it. Okay, account went up, it's in the green, it's in the blue, whatever platform you use. Okay, boom, I'm going to close it. What you're going to start doing is developing this mental psychology stigma. Oh, I'm winning. You're going to unintentionally increase your lot size and over leverage at some point in time. And then you're going to feel like you Steph Curry in the market. Man, this setup work all the time. It really don't. There's no setup that's 100% bulletproof. There's no setup that percentage-wise this setup ranks higher than this setup. No, that's a myth. That's trading myth. It's trading myth. So my question to you is this: how do you know your trading setup works if you don't allow it to pay out? How? You're working against yourself. So that's why I've created this system that, okay, cool. Even in a overall possible losing effort, I can at least take a partial. Market hit TP1 before the remaining volume gets taken out the bottom market. So what did I do right here on this particular trade? You see the clock is dim, right? Because I put a horizontal ray right here, said TP1 hit. Cool. Went to my platform, closed 50% partials, put my stop loss at break even. Guess what? Let the overall rest of the trade ride. And look what happened. Boom. 1 to 10 plus. 1 to 10 plus. Now, let's go ahead and see, based off where the market stopped at, let's go see what we could have had. We're looking at 1 to 20 right now. 1 to 20. So here's the deal. If you are sitting here and saying, oh, you know what? I'm gonna put my overall TP 20% from my entry. Cool, do that. Okay. But have a take partial system. Because what's going to happen is this: You don't want to trade with ego. Okay. So, say for instance, I was trading that 1 to 10, right? And okay, the market hit TP1, but I didn't close partials. What I am now risking is walking away with pennies. I've did all that hard work, patiently waited for a setup, and didn't pay myself from the trade. Is it better to trade with your stop loss out of profit or better to trade with your stop loss in profit? And I walked away with at least half. Y'all get what I'm saying? So come over to the free Telegram, Trading Community and Trading Signals Chat, IOD and R Duffy, excuse me, and you'll learn that. You'll learn the take partial system. I do it every single time. Ron has been trading with me for the past 2 weeks. 2 weeks. I do the same thing every single time. Don't care what it is. I'm going based off of my stop loss, my entry. I'm going, my overall TP is going to be 10%. Okay. That's the take profit price number I have in my platform, but I have a horizontal array where it says TP1. Soon as that get hit, boom, he has seen me every single time. I go close partials. I'm not going to trade with ego. The market reverses on me and doesn't go overall 10%. Okay, this is one of them. It wasn't a 10R trade, but at least I walked away with half. Because over time, what's going to happen is this. Say if you're taking a partial at 1%, or say if you're taking a partial at 2%, right? So honestly, if I did on gold a 1 to 10 trade, right? And say at 2% profit, I took 50% of my volume off. Okay, at 2% profit, I really just took 1% because I only took half. I didn't close the whole trade. I only took 1%. And so now the remaining volume, if it overall goes to a 10% trade, now that becomes a 5%. Does that make sense? People that's on my live with me, does that make sense? If I'm in an overall 1 to 10 trade and I haven't taken a partial yet, it's a 1 to 10. At 2%, I take the 50% partial because it hit TP1. That now becomes a 1% taken trade. I have closed and taken profit at 1%. Now that overall 10% becomes 5% because I've taken partials. So technically, yes, this is 10% from my entry, but overall it paid me out 5%. So in order for me to go for another 10%, I'll have to do what? I'll have to do a one that I'll have instead of that 10, I'll have to do a 1 to 15. I have to do a 1 to 15. So with the take partial system, it turns into a 1 to 5. All right. Still 10% from the entry, but overall, because you're taking partials, it turns into a 1 to 5. But still, so think about it. So think about the trade going against you. Say you hit TP1 and it's reversing. Think about all of those trades that can hit TP1 and don't overall go to the 10% don't overall go to TP2 and they reverse. Okay? How many trades that can compound and build up to 3%, to 4%, to 5%? Think about it throughout the week. I overall would have been in a losing effort if I didn't take partials at this TP1 and put my stop loss at break even. The overall trade would have went against me, and my account would have had hit a pullback or a retracement or a correction. Okay. So it took the remaining volume out, but I still walked away with at least 1% or at least 2%, whatever the case may be. Or so say, like I said, if it hits a 1 to 2 and then you close partials, okay, you just close partials on 1%. You just took 1%. Guess how many trades? If you do 3 trades like that and the remaining volume comes back and hits break even, that's 3% growth. That's 3% growth. And then let's just say you had a fourth trade that you took partials on. Okay, that's another 1%. That's a 1 to 4. I mean, that now you got 4% increase. And then the remaining volume, it hit TP2. So then that's another 5%. Now you're at 9%. You're at 9% growth. So yes, in an overall losing effort or lesson, you can. That's why that was the point. That's the whole point of the take partial system. It's the whole entire point. Okay. So now you probably ask, okay, so cool. What we looking at on gold now? Okay. So here's the deal. Okay, we're gonna look at gold. We're gonna look at gold. Then we're gonna look at Bitcoin. All right. So here's the deal on gold. Okay. We know that the last accumulation level is right here. That's unmitigated, right? So we have to zone this out, right? Because this came back and retraced into what? This level right here. This demand zone right here. It accumulated, reaccumulated, broke this structure right here, right? That makes sense? Right? This whole deal right here is a reaccumulation. You can see it. Slanting inside. You got this slanting like this slanting like this. You know what I'm saying? Whole deal is a reaccumulation. So cool. That's still a break of structure. Okay. Now here's the deal. You got the market doing what? Oh my goodness. Look, it happens every single time. Look at this distribution. Engulfing candlestick, right? Nothing came back to hit it. Redistribution, engulfing candlestick. You knew the bulls was about to come in. Does that make sense? Do y'all see the evidence? You have to understand the footprints in the sand. Do you see the evidence? You see it. Now here's the deal. Why would if you are in control of the sellers or you are in control of the bearish market, why would you sit up here and leave these unmitigated supply zones? You wouldn't do that. So it becomes a retracement, it becomes a correction, it becomes a pullback. You knew it was coming. You knew it. Well, I'm gonna say this: if you trade with me, you knew it. If you didn't, I can't speak for other people. I just know if you trade with me, you knew it was coming. So, bam! Look, redistribution, right? Engulfing candlestick, supply zone, right? Cool. We on the M5 with it. All right. So here's the deal: we go down to lower time frame. We see another what? Distribution, redistribution, engulfing candlestick. Okay. Tap into the M1. What we got? What we got, coach? What we got, coach? Okay, cool. We see this what? Engulfing candlestick, distribution, retracement, redistribution. So bam. So even, okay, cool. Look at this. Even, I hope I don't confuse y'all. So look, think of a redistribution cycle. Internally, okay, think of a redistribution cycle. Internally, what causes the market to break out of the redistribution cycle? Internally, you're going to have a smaller distribution, redistribution that breaks out of a redistribution cycle. Does that make sense? I hope I'm making sense. So right here, look at this. What I'm saying is this. You see how this is a redistribution? What causes this to break out and go bearish? A distribution, redistribution. Okay. So this pullback, this engulfing candlestick, distribution, redistribution, boom. Okay. When the market went bullish right here and it didn't stop in between here, it made no type of rejection in between here on this redistribution, because from here to here, There's a redistribution printed. You just can't see it. Okay. I understand it from market experience. Okay. It's a redistribution in between here, right in here. I'm saying y'all because as far as experience, it's a redistribution in between here, but you just can't see it. All right. I know it is. So then that's why distribution, redistribution, right? Accumulation. Here's the bullish engulfing candlestick. As soon as I would have seen this market right here close this bullish candlestick and it disrespected this redistribution, boom, buy market execution would have been right here. My stop loss would have been below this particular candlestick right here, because that's the last bullish move. And guess what I would have done? This right here would have been TP1, this supply zone. Okay, cool, bet. I would have closed 50% partial, stop loss went to break even, and guess what? That remaining volume would have went 10%. And guess what happened? Where are we? Almost there. That's how I trade. This is not my style of trading. It's just what the market is. It's not no magic pill I'm doing. I'm not doing anything magical position. It's just what the market prints. And what I can do is this. I can't promise you, like me personally, I can't promise you and guarantee you like Orlando's going to make you become a consistent, profitable trader. That's not going to happen. What's going to happen is this. Orlando can promise you and guarantee you that he can increase your level of understanding, and that your level of understanding would allow you to become a consistent, profitable trader. My goal is for you to be able to comfortably take a trade without me, to comfortably embark on your journey to participating in prop firm challenges. By the way, the link Sway Funded is under my YouTube live session video. What you want to go ahead and do is click on that Sway Funded link. It's the fourth link in the description below. Okay. And you can register your account. And whenever you are ready, evidence will show you whenever you are ready, and mentally it'll show you are ready. Whenever you are ready to take a prop firm challenge, all of your KYC and verification, it would already be done. It already be done. So my advice to you, if you're coming in as a beginner, you consider yourself a beginner, intermediate, or advanced, it doesn't matter, and you still want to learn. I'm always be a student. You're not, and you don't have the confidence to trade in a live personal trading account right now. Let's go ahead and create you a vision account, a demo account. Okay. What you can do from your paycheck or from whatever sources of income you have, you can deposit $25 to $50 per paycheck, or for whatever source of income you use, into your live trading account, and don't touch it. Let it accumulate and build over time until, okay, cool. When you're ready to trade your live personal trading account, then boom, you've been practicing. Proper practice prevents poor performance. Okay, you've been practicing in the demo account, taking live trades for myself. Whenever you feel the comfortability and need to look at the market yourself and take live trades, do that. But if you don't have the comfortability, you don't understand it, don't do it. Come on here live with me on the Zoom. We're trading live 5 to 6, 7 times out of the week. Especially Monday, Wednesday, and Friday is at 4:30 a.m. Central, 5:30 a.m. Eastern, 2:30 a.m. Pacific. We're on there for at least a minimum of an hour. It's recorded live. Tuesdays and Thursdays, we're live 9 a.m. Central, 10 a.m. Eastern, 7 a.m. Pacific Standard Time. So with the exception, we do not trade on Saturdays. I consider that family fun day. And then we don't trade on Sundays. I would look at Bitcoin and just get some marking up practice in. You know what I'm saying? Like right now, we're going to look at Bitcoin. Okay. So right here, yeah, this definitely would have been a trade of mine. Because look, it is showing you. It's showing you that it wants to go bullish. Unmitigated supply zone. change of character, redistribution. Hey, we're going to go bullish. So look, right here, slanting upward. Okay, that's not really a divergence based off of the relative strength index, but still the footprints in the sand, unmitigated supply zone, right? Redistribution, unmitigated supply zone. Nothing showed you that it wanted to go bearish. That's just a retracement. Then boom, here go the bulls. So now you're saying, okay, cool. Okay, that happened. Now, what's next? Okay, cool. Watch this. M5 time frame, right? Okay, cool. This happened. You got this low, you got this distribution high, retracement into some type of demand zone. And here's the what? Bullish engulfing candlestick. We know that's a representation of what? Accumulation, right? So guess what? We see that unmitigated, right? Cool. That's an area of interest where the buyers can come in at, right? Cool. Just mark it off. Area of interest where the buyers can come in. Okay? Because guess what? The market can definitely do what? Retrace if it wants to, and the buyers can come in. You don't know. Don't know. Okay? So boom. You can say what? Okay, cool. 5-minute demand zone. Bet. Okay. So what you're doing is this. Okay. I got a low. M5. Okay. I got a high. I got a low. Cool. Market what? Reaccumulated right here, right? Boom. All right. Market pushed up. Reaccumulated right here. Okay, cool. Bet. So then what happened right here? You had this high, retracing to this low. This accumulation low right here didn't have enough juice to do what? Accumulate, reaccumulate, break this high and create a new one. So guess what? The sellers came in. Engulfing candlestick, distribution, redistribution, breaks this low. So it used this as what? Liquidity. Okay, boom. Now guess what? We come back into what? Demand zone, unmitigated demand zone, and do what? Let's go back bullish. That's that reaccumulation, right? Boom. So now what do we have? Okay. We got a low that created this high that came back low because this is where the bulls came back into the market, right? Now here's the deal. Let's tap into the M1 right here. You're probably asking, hey, so Orlando, dealing with this all right here, when was the possible great opportunity in order to come into the market for the buy? Okay, I'll tell you. Cool. So we have an unmitigated supply zone right here, right? The market probably diverged right here, change character. We know that change of character does not determine a change of trend, but a break of structure shows what? Continuation. Okay. Opportunity for the what? Sellers to come back in, right? Seller sold, created low, retraced this supply zone, create a lower high, took out this low. We know that the what? When an old low is broken and a new low is formed, the bulls are going to come into the market. So guess what? This distribution, redistribution, did not break this old low and create a new low. Do you see that? Do you see it? It probably did. Yeah, it did. It did. So anyway, the market, the distribution, redistribution broke this old low, created a new low. So guess what? The bulls have to come into the market, right? The bulls got to come into the market. So you have this accumulation candle, right? Market accumulated, it reaccumulated, created this high, retraced, distribution, redistribution, distribution, redistribution. Then what? Engulfing candlestick right here. Boom. Should have been in for a buy. This lets you know that it was done retracing. And when this engulfing candlestick came right here, boom, this should have been a buy. Right here, stop loss below this low. Make sense? Y'all stuck with me so far? Cool. So now let's continue in on the M5 on gold. All right. So now look, this is a what? Now look, M5, this is a what? A break of structure, right? We got to be aware. This is a break of structure. So why? Because the market did what? Accumulated, right? You can see the what? The reaccumulation, right? Now, who eventually needs to come into the market? We don't know if they are. It's not a matter of if, it's a matter of when and when they want to. No matter how and when they want to. So now we go to the M1, right? We go to the M1 with gold, right? Okay, market tapped in, market retraced right here, tapped in, accumulated, reaccumulated, broke this structure, right? Broke this structure now and created what? New highs, right? So now what are we looking at? Right in here. What are we looking at? Okay, the market retrace, distribution, okay, redistribution, engulfing candlestick, the market pushed back up, accumulated, reaccumulated, but it hasn't broken the old high yet. So we will have to wait for the market to open up tomorrow at 4 p.m. Central, 5 p.m. Eastern, 2 p.m. Pacific Standard Time to see what does it want to do, because you're really not too sure where the market paused at as what's about to happen. Okay, so you sit on your hands on that. Okay. So now we're going to move over to Bitcoin. Okay, we're going to move over to Biddy. I'm going to be looking at the Coinbase version, the Coinbase version of Bitcoin. All right. So here we go. Now I'm going to completely erase Bitcoin and I'm going to mark it up from scratch like I always do. All right. So the market accumulated, reaccumulated, broke this old high, created a new one. Right. So cool. Break a structure. Right. Monthly breaker structure above, right? Okay, cool. I don't have to worry about anything right here because it's going to be a hell of a long time before it get back to here in order to start doing some bullish moves. So now we tap into the weekly, right? Now the weekly, we see the market has done what? Okay, it created a supply zone. So you can see right here how this low tapped into a demand zone, right? This demand zone didn't accumulate and reaccumulate and break above this old high and create a new one. It stopped. Sellers came in, distributed, redistributed, broke this low, created a new low, right? So now this retracement back into what? Accumulation, reaccumulation, came into a supply zone, distribution, redistribution, breaks the old low, creates a new low. So right here, you have a what? A breaker structure, right? On the weekly. All right. Weekly breaker structure, market retrace, accumulation, reaccumulation, tapped into this supply zone, did what? Distributed, redistributed, broke this old low, created a new low. Okay, cool. This right here is a what? A breaker structure. Okay. Now we see the what? Market do what? Accumulate, reaccumulate, retrace, create a lower high. This lower high didn't do its job. Distribute, redistribute. It didn't take out the old low. Oh, doggone. It didn't take out the old low. Man, we need to see what's going on the lower time frame, right? We need to see what's going on. Man, that thing went back bullish on the daily. So guess what we're gonna do? Okay, cool. Let's go into the daily. Let's see what's going on. Okay, cool. Now on the daily, we're gonna do this. We got a low. Oops, I put two of them. On the daily, we got a low. Gonna turn this red. Daily structure point. We got a high. So we got this accumulation candle, right? So then we got the market created a high. We got the market tapped into that demand zone, created this low, right? And then the market did what? Accumulated, reaccumulated, broke this structure, created a new one, right? New high. So guess what? What we got right here? Accumulation, reaccumulation, market retrace, disrespected the what? What causes a reaccumulate? What market price cycle causes the reaccumulation to be disrespected? What market price cycle causes the reaccumulation to be disrespected? What market price cycle does it? If the bulls are not going to come in off of a reaccumulation level and the reaccumulation gets disrespected, what market price cycle has to print? Y'all confused? Y'all confused? Think about it. If the bulls do not want to come in off the reaccumulation price cycle, which is a bullish triangle, what price cycle is going to disrespect the reaccumulation zone? Which market price cycle is going to disrespect the reaccumulation? Absolutely. The redistribution. There you go, Aki. The redistribution is going to disrespect the reaccumulation. All right. Absolutely. 100% agree. So here's the deal. What did the market do? Distribute. Boom. It didn't come in off this reaccumulation zone. What did it do? Redistribute it. Right here. You see it. Right? Okay. You see it. So then the market what? Distribute it. Oh, dang. Dang, bro. You know what? Look at the clues in the market. What do we have right here? We have an open supply zone, a redistribution, and another open supply zone. So the market couldn't have been going below this low to do what? Go bearish. Oh my goodness. Oh my goodness. Oh my goodness. The footprints being the same. The market gonna tell on itself. You just gotta be able to read it. Don't matter the time frame. Doesn't matter the time frame. It's gonna tell on itself. It told you right here that, hey, bro, we really don't want to go bearish because we didn't create a lower high. We didn't come back and create a lower high inside of this first impulsive move. We didn't retrace this first impulsive move. We just want to create a redistribution, and we want to be a retracement to create a higher low, and then do what? Go back up and create a higher high. That's what we want to do. Okay, cool, bet. So the market did this. Boom, here go a low, right? So now this is just substructure. Okay. So yeah, these 2 points are just substructure. Okay. But we're gonna remove this and do the overall structure. With this is the low, this is the high, right? That tapped into what? This redistribution supply zone, and it did not lead to a new low. And the market did what? Excuse me. Market did what? Broke structure, created a new high, right? So now that the market created a bullish breaker structure, who has to come into the market? Now that the market created a bullish breaker structure on the daily, who has to come into the market? All right, Aki. Take care. See you next week. See you on session next week. So now that the market created a bullish breaker structure, who has to come into the market? The market broke an old high, created a new one. Who got to come into the market? The bulls or the bears? The bulls or the bears? Y'all follow me? Y'all going to sleep? All right. So the bears. So the market broke this old high, created a new one. The bears got to come into the market. Okay. So now what I see is, okay, cool. The market created this high, created low, this accumulation right here. Okay. This is an area of interest where the buyers come in at, and boom, look what happened. So here's the deal. Daily demand zone. Okay, cool, bet. This is what happened. The market created this high, distributed, redistributed, created this low, accumulated, reaccumulated, created this high, distributed, redistributed, broke this old low, created this new low. So guess what? This low right here was used as what? Liquidity. So now this is an internal breaker structure. This right here is an internal break of structure right here. The market did what? Distributed, redistributed, broke this old low, created a new low. Now that a new low has been created, the bulls have to come in, and it's on a what? Unmitigated demand zone. So the break of this old low, creating a new low, is like the ICT term sell side liquidity being taken. A new low was formed from here. Okay. So this is like sell side liquidity being taken. Okay. All right. So now we can say this. This is how you mark up structure. Okay. So now low create this high led to this low led to what? Possibly this high right here, because we got a what? Engulfing candlestick, right? So now we want to do what? Let's tap in to a lower time frame. H4. Let's go. Let's do it. All right. So now we see how the market has done what? Tapped into this demand zone right here, right? So this demand zone did not do what? Accumulate, reaccumulate, and lead to a new high. Respected this supply zone right here and did what? Hasn't led to a new low yet, though. Okay. So we got H4 demand zone, we got H4 supply zone. Okay. So now we see what? We see the divergence. We see the change of character right here. Okay. Now, did the market decide to pull back here or create a redistribution? It decided to do what? Create a redistribution. All right. Decided to create a redistribution. I'm anal about my colors on my chart, y'all. That's the OCD of the charts. All right. So now with this H4, we know that this is the low, right? This is the accumulation low. Okay, push up. Now it created this internal lower high. Now we need to tap into the what? The H1. We need to see if the H1, what's the H1 doing now? So now obviously H1 is bearish because now you got the what market doing what? You got this high, you got this low, you got this lower high, you got the market distributing, redistributing, breaking structure, and doing what? Creating a new low. So now internally on the H1, this is what you have. Mark that green. Cool. High, low, lower high, break a structure right here, lower low, internally. Let's see, 1 hour break a structure below. Okay, cool, bet. So now you can see how the market did what? Diverged, changed character off this particular level, right? So now we're drawing this level like this. Cool, bet. Okay, we're going to say this is H1 demand. All right. And then boom, let's go down to lower time frame, M30, right? So what we see on the M30, we see that the market tapped in right here and broke structure. So market tapped into, let's see, M15 has got the particular candlestick. Yeah, so I'm gonna do it on M15. So we can see how the market did what? Tapped in right here, right? Created a low and did what? We're gonna say M15 break a structure, right? Boom. M15 break a structure above, right? So now, let's see. I'm gonna put this as the M15 demand. Okay, cool, bet. Market went bullish. That's fine. So now let's tap into the M5. Right? This is literally how you do your homework. Literally what you have to do. So okay, the market came off of this level. I can see where the market broke structure right here. It went back bullish. It did a divergence, change of character, market high, boom, pushed up, broke structure, came back. Oh, it's gonna be nice. Hold up, maybe a nice sale coming. Hold on. Right here. Let's see. M5 supply. Market about to break that low. Oh yeah. Distribution. Let's see. Distribution, redistribution. Got to be careful. Okay. Unless the market wants to break this low. This let's see, distribution, redistribution. Got to be careful. It's probably want to come back and push this, but if the market decides to break this low, I would say take it for a sale and put your stop loss right here. But you have to take into consideration that the bulls do have an opportunity to push this back because you see the distribution, you see the redistribution. The bulls have an opportunity to probably retrace a little bit. So it may, I'm gonna tell you what you probably want to do. Use this as liquidity, come back to this supply zone right here and may sell. That's what I'm thinking. That's my anticipation. Or like I said, if it sells, if it breaks past this low, this will be a retracement to what, and this will be a retracement, accumulation, reaccumulation, retracement into a supply zone. And then you're thinking that this low probably wants to do what? Break this old low and form a what? New low. So then if you catch the move right here, coming out and breaking this old low, sell market execution, stop loss goes above here somewhere, and then you let what? It ride out, whatever the case may be. So right here, if you're looking at M5 structure, you're looking at it like this. Low. This will be a high. This will be a low. Retracement into that. Engulfing candlestick, break structure, create a high. This will be the high. And now you're thinking, okay, cool, bet. So now I got this M5 structure, right? And I'm looking for a possible M1 execution. Okay. So now what do I have? I have this unmitigated zone right here on the M1 where the bulls can do what? The bulls can come back and do what? Participate in the market right here. Make sense? Bulls have opportunity to do it because the market did what? Create a higher low, accumulated, reaccumulated, broke this structure and created this high, right? So, but my anticipation based off the higher time frame is this is looking to sell. Let me see. Where's this? Had to be news or something. But my thing would be this is probably looking to sell. But I could be wrong. I just gotta wait for the candlesticks to print. Just show me the evidence. Show me the evidence. Let's see. Pushed in here. Boom. Sell. Let's see. So from here. Nah, I'm thinking it's going up. I'm thinking it's gonna go up from this level right here on this M1. So let me make this M1 zone. Let me see. I think it's gonna tap in and go back bullish. So what I'm seeing is this. Okay, market creates that high. Market retraces this supply zone right here. Obviously, we diverge, change character right here. Create a high, came back. Boom, break a structure, create a new high, tap back in. Yeah, I'm gonna look for buys. So I want this to break this low to fuel. This would be the liquidity. Okay. This will be the liquidity to fuel the buy move to the upside. All right. So I'm going to, me personally, I'm going to wait for the buy. Make sense? Make sense? This is what you have to go through as a trader. Like you could take these sales, short-term sales in here, but me personally, I'm looking for the buy because you know that we're bullish. You know that we're bullish on the M5. Okay. Now the thing about it is this: what are you possibly thinking that the market is attempting to do. Is this lower high, is this possible lower high going to do its job and do what? Break this low and create a new low? That's the question. Or are the bulls going to stop it from happening, prevent it from happening, and do what? Come in at a buy at this level? That's the question. All right. That's the question. So, me personally, I'm gonna be looking for buys. I'll be looking for buys. Give me a confirmation. I'm not saying as soon as it hit here, I'm gonna take it for a buy. I'm gonna wait patiently for the buy to present itself. Then I'll take it for a buy market execution. Okay. Any other questions, problems, or concerns before I end this live? All right, because we've been on here for an hour and 21 minutes, and I know people gotta check on family members and things of that nature. I know it's 10:47 on the East Coast. Any other pairs that anybody wants to see mark up? Any indices? Any forex majors or minors? For the individuals that joined my session, that's not a part of the Telegram trading community or trading signals chat. What you can do is subscribe to the channel. All right. Appreciate each and every one of you for taking time out of your busy schedule in order to listen to what I have to say. It is always greatly appreciated, and I'll never ever take it for granted. Have a safe, blessed, and productive rest of your super Saturday. Know that I love you. And as I always like to say, God created us on purpose to fulfill a purpose. So what purpose are you willing to fulfill? And always remember, don't be one of many, be the one. Y'all take care. Signing off. I'll see you all on the session Monday morning, 4:30 a.m. Central Standard Time, 5:30 a.m. Eastern Standard Time, 2:30 a.m. Pacific Standard Time. Let's get it. Gonna have a successful, have a safe, blessed, productive week ahead. Have a safe, blessed, productive, profitable week in your trading accounts. Y'all take care. Love y'all. All right. IG, take care.